Hi everybody. In our last Chapter 12 review video, we worked some problems relating to an equity investment where the investor did not acquire sufficient number of shares of voting stock to allow the investor to significantly influence the investee. In this video, we'll modify the Adams Industries example and work some problems using the equity method to account for this investment. On 1/1/X1, Adams Industries paid $9 million for 100,000 shares of Sparks Company common stock. During X1, Sparks paid dividends of $1 per share on the 400,000 shares of common stock outstanding throughout the year. The market value of Sparks stock was $95 per share on 12/31/X1. Sparks reported net income of $870,000 for the year ended 12/31/X1. For purposes of this example, you can assume that the amount paid is exactly equal to 25% of the fair value of the identifiable net assets on Sparks' balance sheet. How much unrealized gain or loss will Adams record for this investment at 12/31/X1? Adams purchased 25% of Sparks common stock, so significant influence is assumed, and Adams will use the equity method to account for this investment. No unrealized gains or losses are recorded under the equity method. At what amount will Adams report this investment on the balance sheet at 12/31/X1? Adams will report the investment at 12/31/X1 in the amount of $9,117,500, calculated as cost of $9 million plus 25% of Sparks' net income, $217,500, less 25% of Sparks' dividends, $100,000, equals the investment's carrying value on Adams' balance sheet at 12/31/X1 of $9,117,500. How much revenue will Adams recognize in 20/X1 from this investment? $870,000 of net income reported by the investee for the year times the 25% ownership equals $217,500 that Adams will recognize as investment income for the year ended 12/31/X1. Under the equity method, dividends received from the investee corporation are not treated as investment revenue. Instead, they reduce the investment. The journal entry to record dividends received from the investee corporation is a debit to cash and a credit to the investment. Well, that's all for this video. In the next video, we will use the Adams Industries example and make it just a little bit more complicated. See you next time.